Today we are going to see about India's banking giant HDFC Bank. We all know that recently the bank has a 1:1 bonus issue, the bank's first bonus issue. So, is it still a good investment after the bonus? Why we are talking about HDFC Bank? Because it is the stock in every Indian investor's portfolio, in myself too. The boss of the stock market for the past 2 decades. Two main things happened in the past. One is HDFC Bank and HDFC Limited merger, and the second one is recent 1:1 bonus issue. In this video, we are going to find whether we can still invest in the stock and we can make good returns. Understanding the first, we need to know about how to get invested and stay patient in a stock for a long period of time. Two main things. One is understanding the business from the basic and the promoter integrity. First, let's see how HDFC Bank became a legend. Is it a luck? No. HDFC Bank was built on many pillars, and we are going to break down each and every one in this video. So don't skip this video. Please subscribe before start watching and hit the like button. It will help us to grow. For easy understanding, we can divide it into several segments. Let's take the advantages of the HDFC Bank, the mega merger, and the fundamentals like the key metrics to watch, and the final, the verdict, whether we need to buy the HDFC Bank shares now or to hold on or to sell. Let's see in this video. First, we will see advantages of the HDFC Bank. What are the advantages does HDFC Bank have? Many advantages, like superior technology they use, operational efficiency, they have a diversified revenue, they have a low gross NPA, conservative lending. There are many advantages, so we will see one by one. First, we will see operational efficiency of HDFC Bank. HDFC Bank has consistently maintained highest CASA ratio in the industry. What is CASA ratio? Current and savings account deposits. This gave them a cheap source of funds and industry lending net interest margin. To say simply, it was best at the business. Secondly, we will consider HDFC Bank's technology. HDFC Bank's technology is considered to be the market leader. Why we are saying like that? So, because HDFC Bank built its core banking system in a modern integrated system, and this is a great advantage for them because it gives a great advantage for higher volume transactions and seamless integration of new products like mutual funds, credit cards, insurance, etc. And HDFC Bank uses a sophisticated algorithm to analyze a vast amount of customer data for instant loan approvals and increasing the credit card limits. You can increase your credit card limit through your WhatsApp also, which I had done in my card, and managing the risks also very easy for them because of this sophisticated algorithm. This allows them to serve massive customer base efficiently. Next, we will consider conservative lending and asset quality. While the other banks like ICICI Bank, Axis Bank chased growth aggressively, HDFC Bank was prudent. This resulted in consistently low gross NPA, non-performing assets. For years, it was a gold standard for the asset quality. Next, we will see the diversified revenue. HDFC's revenue was diversified very much than any other bank. A huge of its profit came from fee-based income, like selling their products like mutual funds, insurance, and credit cards to several customers. So this made them less reliant on lending the money. So then no, so they need not to be more dependent on the income came from lending their money. Second, we will see that mega merger in the Indian stock market history. In 2024, HDFC Bank completed its merger with its parent company, India's housing finance giant HDFC Limited. This merger creates both strength and weaknesses. First, we will see that strength. Huge loan book. HDFC Bank received a huge loan book and many cross-selling opportunities. Just imagine that selling the banking products to vast HDFC home loan customers. It is a huge opportunity for the bank to develop on that time. This merger has created many weaknesses also, and one of the weaknesses is CASA ratio of the HDFC Bank has crashed at that time because HDFC Limited relied more on expensive wholesale funding or not getting any current or savings account deposits. This made that CASA ratio of the HDFC Bank to crash at that time. Secondly, we will consider that liquidity coverage ratio. Basically, banks have to hold high quality liquid assets against that wholesale funding, which means more money sitting ideal, which could impact or potentially impact the profits of the bank. Definitely all these points have worried the market about the growth of the HDFC Bank. Next one, we will see the numbers, key metrics to watch. So as a potential investor, what should we do? Don't just look at the headlines or to listen to any other analyst or to me. Just see these numbers over few quarters. What are the main things to consider? CASA ratio, net interest margin, loan to deposit ratio, gross NPA and net NPA, return on assets and return on equity. These are the 5 major points to consider for a bank. First, let's see one by one. The CASA ratio of the HDFC Bank was around 44.4% in the financial year 2023, and this was the highest CASA ratio at that time in the banking industry. In the financial year 2024, it fell to 38.2%. It is not a small one, it is a huge drop, and this was mainly due to that merger with HDFC Limited. In the financial year 2025, again it fell to 35%. So it is struggling to get back to its old position. So let's see what happens in the future. Next, we will take net interest margin. The net interest margin was around 4.3% in the financial year 2023. In the financial year 2024, it was around 3.2 to 3.6%. In the last year 2025, it was around 3.7%. So it is slowly recovering after the merger. So we need to wait and see what will in the future. Next, we will consider the loan to deposit ratio. The loan to deposit ratio was around 86 to 87% before the merger. That was in mid 2023. Post merger, it went to the peak around 110%, which is a very bad sign for a bank. In the second quarter of the financial year 2025, it is reduced to 100%. In the third quarter of the financial year 2025, it reduced to 99%. In the last quarter of the financial year 2025, it reduced to 97%. So it shows some good sign. HDFC Bank has targeted to reduce it to 85 to 86%, which is its old value, by the end of the financial year 2027. So we will wait and see whether they are achieving their goal or not. Next, we will take that gross NPA and net NPA. HDFC Bank's asset quality remains robust, as gross NPA is only just between 1.3 to 1.4% consistently. and the net NPA is under 0.5 percentage, which is a good fundamental for a banking stock. Next we will take that ROA and ROE, return on assets and return on equity, where it is in the financial year 2024 it was around 2 percentage, the return on assets, and the return on equity was around 14 percentage. In the financial year 2025 it was around 1.7 percentage, and the return on equity was 13 percentage. In the first quarter of the financial year 2026, the return on asset has increased to 1.94 percentage, and the return on equity has increased to 14.7 percentage. And these are shows some good sign of the bank is developing some profits. So these five metrics will show you that merger story than any other TV experts. You can understand easily. Now let's come to the final part of the video, the verdict. What to do, whether to buy the HDFC Bank stock now or to sell or to hold. This is the $1,000,000 question. Let's consider in both the cases, the bull and the bear. First we will see the bull case. HDFC Bank's price was already fallen very much. It was factored by all the bad news in the market. So now you are buying a phenomenal great business at a relative discount. Their management is still best in the market, that everybody knows. Now let's see that bear case also. Consider a HDFC Bank as a gigantic ship which can't turn quickly. Their margins will remain permanently lower and the growth will be very slow. So if you consider me, I am in a selective buy camp and I wouldn't go all in. So if there is any dip, it is a great chance to accumulate slowly. You need patience. It's not the same hyper growth story. This is a story of 3 to 5 years and not a 3 to 5 month trade. I need to know what your take on HDFC Bank. Let me know in the comments below. If you found this video helpful, hit the like button and subscribe for more further fundamental analysis. Thank you for watching. Do your own research before investing in a stock, and I am not a SEBI registered advisor. Thank you.